Government policies are always changing, always. One administration may enact a certain policy, and the next administration comes in and changes that policy, right? You just saw that in the recent just two administrations. President Joe Biden was very encouraging of the renewable energy, those kinds of companies offering incentives and discounts, etc., to promote this industry, the renewable energy, clean energy industry. President Donald Trump is against that, right? So his policies removed many of the policies that were implemented by Joe Biden, took away the tax credits, implemented tariffs that are hurting not just the renewable industry, but many industries altogether. And the management team elaborated a little more, saying that it's mainly on the batteries that they're being hit with the tariffs. In fact, they're facing a 40% tariff on the batteries. They have diversified their supply chain well enough on microinverters in the last 3 to 5 years that the impact on microinverters is not as high as the impact on batteries. Now, it's still facing a higher cost of goods sold, but remember, China and India have the highest tariffs right now, around 50%. And some products are a little bit lower, some products are a little bit higher, but on average, the tariff rates are between 40 and 50% on China and India. And so if you have manufacturing that's dependent on those regions, the costs are going to be much higher. In almost every other part of the world, the average tariff is around 20%. Some places a little bit higher, some places a little bit lower. It gets very confusing because there are exemptions, exclusions, and incremental additions and reductions. But overall, if you're manufacturing outside the United States, you're facing higher costs, right? You can estimate something between 20% and 50%, depending on what product you're importing and the region, the country you're importing from. So all U.S. businesses or all sales to U.S. customers of products that are manufactured outside the United States will face a higher cost of goods sold, and that's a big negative for Enphase Energy. I have this stock rated as a hold. I think the valuation is relatively attractive now. With the big sell-off, it's trading at a forward PE of 14 and a forward price to OCF of 10. But I think the headwinds are significant, and so I wouldn't be buying just yet. And valuation wouldn't be my primary concern right now. My primary concern would be the management's ability to navigate these big changes.
Click the link below to watch the full video.